Today we're diving into the top 5 stocks to buy in the month of April 2022. I spent hours of research going over hundreds of different companies, and I found a few that I believe to have huge growth potential this month. On Tuesday, the S&P 500 index exited market correction territory. This is a very encouraging sign for investors, as this chart right here shows average gains of the index during certain time frames after exiting correction territory. This correction has caused a lot of stock prices to fall pretty much across the board, so there are definitely going to be some names that I'll be giving you today that are at a great discount and can be primed for a good rebound. In addition, inflation is at all-time highs, so I'll also be giving you some safer picks that can help you to keep up with the decline in purchasing power of the dollar with investments that are not only safe but also pay you back for holding shares of the stock in the form of a dividend. Now be sure to watch this video all the way through, as I'll be giving my full analysis on each of these stocks, and I'll be covering relevant news, significant numbers, price action of the stock, and my price predictions. As a disclaimer, I am not a financial advisor and my stock picks are not financial advice. This video is for entertainment purposes only, and this is simply a compilation of stocks that I believe will do well in the coming months based on my research. As always, make sure to do your own due diligence before investing your hard-earned money. Anyways, before we get started, please do me a favor and hit that like button, and if you're new to the channel, consider subscribing. I post weekly videos from my top stock picks to teaching you how to read stock charts to my trading strategies. You also won't want to miss out on any of these videos, so make sure to turn on your notification bell as well. So without further ado, let's get into my top 5 stocks for April. My first stock pick is Walmart, or stock ticker WMT. This is a dividend stock, and if you all have been with me for a while, you know how much I love dividend stocks as a way of creating passive income, especially for beginners. It's a great way to diversify your stock portfolio as well. Walmart is a massive company with over 10,000 stores in 24 countries. Every week they attract over 220 million customers. In Q3 last year, revenues grew at 4.3%. Not to mention, this stock is a historic winner that has meant to many millionaires in the past several decades. Stock prices have taken a boost due to the e-commerce boom around the time of the pandemic. However, lately the stock has been trending sideways without too much growth. Taking a look at the income statement, we can see steady growth in total revenue, with the company bringing in over $572 billion last year. Here we can see that its market cap is currently $405 billion. It has a very attractive PB ratio of 4.87. Its EV to EBITDA is 14.28, and it also has a beta of 0.53, which shows that this is a safe stock as it moves slower than the market. We can see here that it has a dividend of 2.24 or 1.5%. The ex-dividend date is May 5th, which means that for those of you watching this right now who may be interested in purchasing shares of Walmart, make sure to buy before May 5th so that you can get the dividend during the next quarter. Looking at the weekly chart for Walmart, we can see that price has been consolidating in this range for quite some time. This is not a fast mover, but it has the potential to be a great long-term investment. Currently, it is sitting just at this very strong level of resistance. If we can establish this as an area of support, we can see price continue to rise to all-time highs. Ideally, we would get a break above 151 for a sign of continuation further up. Analysts have Walmart as a moderate buy with a high price target of $185, which represents a $40 gain in the next year. Next up, we have SherwinWilliams, or stock ticker SHW. There is big money to be made in the home repair sector. With the housing market booming, paint has received a boost as well. More people putting money into home remodeling and repairs has resulted in SherwinWilliams being a big beneficiary. However, the stock has been on a bit of a slide as of late. With home repair giant Home Depot missing on earnings with slowed projection growth, the home repair business has hit a bit of a bump. This has caused other players in the industry to cool off as well. SherwinWilliams have fallen from its high of $354 and is sitting at around $245 today. Taking a look at the income statement, we can see steady gains in total revenue, with current revenue topping $19 billion. SherwinWilliams has a $67 billion market cap. It also has a PB ratio of 27.73 and an EV to EBITDA of 25. Its beta is 1.17. This is also a dividend stock with a yield of 2.25 or 0.88%. Taking a look at the weekly chart, we can see a significant cooldown in price. It has fallen so fast, but now looks to be approaching a solid area of support. This red line here is a 200 weekly EMA, and it is one of the strongest levels of support here. Additionally, the RSI is near oversold levels. Looking at the MACD, we can see that it's starting to curl up as well. I think that price could fall a little more, and we are still waiting for a price to find a bottom, but I want you all to watch this 222 to 232 level for price to establish an area of support. From there, I'd be looking to buy calls. Analysts have SherwinWilliams as a moderate buy with a high price target of $375 and an average price target of $329. Next up, we have Store Capital Corporation, or stock ticker STOR. This is a real estate investment trust based in Scottsdale, Arizona, whose primary business is buying properties and renting it back. They have over 3,000 investment properties throughout the US, including restaurants, retail, and manufacturing. During the pandemic, this stock suffered a lot because of the businesses that they own that were forced to close, but they have since recovered. However, their recent discounted price resulted in Berkshire Hathaway buying shares of the company as well as Goodhaven. For 2022, STORE said it expects adjusted funds from operations, a measure of cash flow, to adjust 9.3% from 2021, amounting to $2.15 per share to $2.20 per share. One of the reasons for STORE's success is that they focus on properties that are the centers for profit of the companies they work with. This means that these are properties that each of these respective companies works hard to maintain. Taking a look at the income statement, we can see total revenue increases from $540 million in 2018 to $782 million in 2021. We can see that it has an $8 billion market cap with an attractive PB ratio of 1.63. It also has an EV to EBITDA of 18.24 and its beta is 1.27. Also, it has a dividend yield of 5.21% or $1.54 per share of stock held. Looking at the chart, we can see how much the stock plummeted during the pandemic. However, it has made a strong recovery since then and now is at a very attractive level to buy. STORE hit a high of almost $41 but is now sitting around $30. As part of its rapid price ascension, we can see a gap up in the chart. One thing you should know when looking at stock charts is that all gaps must be filled, and that's exactly what price action did. Price just barely filled the entire gap, and now we can see the top of the gap acting as a level of strong support. I'm here on the week chart, and ideally we would like to see the 5 EMA in pink cross above the 200 EMA in red, with price establishing a firm level of support above the 200 EMA to confirm a move higher. Analysts have STORE as a hold with a high price target of $39. However, with the current housing market boom, I could see prices go even higher, especially if they can break above this all-time high level at $41. This is a slow-moving stock, so don't expect that this company will make you a millionaire overnight. However, not only do current prices present an amazing buying opportunity, but the stock gives a dividend as well. Next up, we have ChargePoint, or stock ticker CHPT. This is a developer and marketer of electric vehicle charging systems, and they also engage in cloud-based services. Last month, ChargePoint and Wheels Donlen, a fleet management company, announced a partnership to provide Wheels Donlen customers with home charging stations. Both companies will be providing tools to companies that need to electrify their vehicles, including at-home charging devices and access to ChargePoint's already 125,000 charging stations across the US. They also just announced a partnership with Toyota North America, and both companies agreed to collaborate on home and public charging for Toyota's new electric SUV. Having an esteemed and well-recognized automotive brand like Toyota team up with ChargePoint speaks a lot to the company's increased circle of trust to deliver high-quality products and services. Taking a look at the income statement, we can see total revenue increases year over year, with current revenue being at $242 million. Their current market cap is $6.6 billion with a PB ratio of 12. They also have an attractive beta of 1.86. Taking a look at the weekly chart, we can see that the current prices are almost half of all-time highs. With current price sitting at this $19 to $20 range, we can see that it has recently broken above a level of resistance and looks primed to establish this level as support. On the weekly chart, we can see that the 5 EMA in pink is crossing the 20 EMA in yellow, which is a golden cross or bullish sign. In addition, we can see the MACD curling up. If price can break above the 50-week moving average at $21, we can see price head first to $27, then $35 and beyond. Analysts have ChargePoint as a moderate buy with a high price target of $34. This is a very cheap stock, and with the push in North America towards an automotive future powered by electrical energy, it is important to have charging infrastructure in place. With ChargePoint being a leader in the industry, this is by far my favorite EV charging pick. Give it a look and let me know your thoughts on the EV market down in the comments. Lastly, we have General Motors, or stock ticker GM. They design, build, and sell trucks, cars, and automotive parts throughout the world. They also provide financing services through its General Motors Financial Company. As well as pretty much every other automotive company out there, GM has been making a recent push to diversify their fleet with EV vehicles. They recently announced a collaboration with POSCO Chemical to work on building a new facility in Quebec that will produce cathode, a material used to build GM's Ultium batteries. These batteries will power their EVs such as the Hummer, Cadillac Lyriq, and Silverado. They recently announced that they will buy out SoftBank Vision Fund's one stake in Cruise LLC, a self-driving startup. They will also invest another $1.35 billion into Cruise. This will not only allow GM to own Cruise, but also have control over the startup. They definitely seem to be heading in the right direction with the acquisitions and near-term ability to begin mass-producing batteries for their EV lineup. Looking at the income statement, we can see that GM has faced a revenue slowdown since 2018. The pandemic really put a halt to production, but it is still encouraging to see a slight increase in revenue from $122 billion in 2020 to $127 billion in 2021. GM currently has a market cap of $67 billion with a very attractive PB ratio of 1.13. In addition, it has an EV to EBITDA of 5.79 and a beta of 1.23. Looking at the weekly chart, we can see that the recent correction has priced GM at a very nice discount. With prices coming off highs at $67, $40, we saw it fall all the way down to $39. This level is a very strong level at $39, and we can see it recently acting as a solid level of support and resistance. I began adding to my position as soon as it hit this level, but it is still an amazing opportunity to start adding to your position. Price just bounced off the 200 weekly EMA, and I'd like to see strength above 48 for continuation back up to its all-time highs. Analysts think the same, as they have GM as a strong buy with an average price target of $72 and a high price target of $100. With the world moving to electrical vehicles, GM could be that legacy player in the industry that takes a leap by providing electrical versions of their already popular vehicles to the masses. When looking to invest, it's important to look towards the future, so definitely add the stock to your watch list, as they have a very positive outlook in regards to adapting to a changing transportation landscape. So those are my top stocks for the month of April. As always, remember to do your own due diligence on the stocks that I mentioned here. I've got a lot of faith in each of these stocks to do really well in the coming months, but that does not replace doing your own due diligence on them to determine if they are the right investment for you. Also, if you haven't signed up for a Robinhood account already, go ahead and click on the link in the description below to claim your free stock. Ultimately, it's a win-win because you'll not only be supporting me and enable me to create more videos like this for you, but you'll also get a free share stock as well. If you haven't already done so, please hit that like button and subscribe to the channel, and don't forget to tap that bell to get notified when I post a new video. Anyways, thank you so much for watching, and happy investing. Peace.